Let me record this. Yeah, for the benefit of those that you know. So who's chatting? Who's chatting? Mute everyone. Okay, okay, no problem. You're welcome. You're welcome. You're welcome. You're welcome. So please, I'm going to mute everybody. After the class, I give like extra 10 minutes or 5 minutes so that we can interact. You ask questions, you ask inquiry. And again, after the class, anybody that feel free, you can chat me up. You can ask me of anything. I really want everybody to learn this thing. I've been trying to eradicate, we are trying to eradicate totally the use of indicators, because indicators has become misleading. I'm not saying I'm using divergence. I love divergence a lot, but my objective, my purpose for price action is to make sure that we approach charts in the simplest, in the simplest, consistent way, using naked price action. That is what I've been doing over the past months. I've been refining the system. I want to eradicate even divergence. I don't want to use divergence anymore. Though divergence works, it works, but I don't want to use any indicator. I want to achieve that purpose, that aim. I want to achieve that aim. So that is why, thank God, and God really, I pray to God. I went to camp, I pray to God that I want to make my trading plan to be as simple as ABC. Anybody that lay hand on it could be able to do. You don't need to meet me. Once you lay hand on it, whatever you get, is what will work for you, so that it will not become complicated. You're not complaining like that. If it does not, what that means, you have to look to yourself what you are not doing right. Yes, this is the simplest so far I found in this industry. Please take your time, be disciplined to it. Obedience is the key. Obedience is the key. Be disciplined to it. Follow through the process. I'm going to lay out some information to you, which I've taken permission from my VIP students, because I have to be fair to them. Indeed, they have stood behind me in my hard times. After the fire incident, they stood behind me strongly. I really want to appreciate them. I value them most. But it's not easy for somebody to lay down 150,000 naira, 100,000 in this economic lockdown. You understand? So I really appreciate them. I must confess to you, I love them, and they are like, we are just like a family. You understand? So I'm going to reveal part of this into you. But when you make something inside, please upgrade your knowledge, upgrade your capacity, join the VIP, so that you can enjoy fully the benefit, like the trade review and lifetime mentorship. So we'll go straight to the teaching. We go straight to the teaching. I'm going to allow this thing after the class. We will interact after the class. We'll interact after the class. Please, let's kick off. God bless you. God bless you for listening, for coming. Now, let me first share my this thing. Okay. Okay, please, if you are not seeing my screen, just indicate in the chat box. Just indicate in the chat box. If you are not seeing my screen, indicate in the chat box. This is AMD trading formula. What is the meaning of AMD? What was AMD? We all know it. It's no longer new to us. AMD is simply accumulation, manipulation, and distribution. Here, I said the 100 times higher probability trade setup. It's even above 100, but at least I say, let me just put 100. I will show you this the premium, the present gold, what the present gold has given. I will show it to you. Please, just lay patient and perceive and receive and retain whatever I'm going to show to you tonight, please. Yeah. Now, in the market, we found out that the market is all about. I'm not going to scare everybody by this information. It's what happens in the market. I'm not scaring you that maybe why, because I say market, they manipulate the market. You run away that maybe they are manipulating your money. No, it's not a scary thing. It's just like it's a warfare. Every stage of life is a risk. There is no business that does not have its own risk. So you have to prepare yourself. That's just the benefit. Just the cruise of it. You got to prepare yourself ahead of every challenges. In order to take authority in that business, you have to prepare your mind. You have to prepare yourself. Everything in life is a warfare. Life itself is a risk. Without even doing anything, it's a risk. So you can't avoid it. You just only learn how to manage your risk. That's all about trading. You cannot avoid the risk in trading. You can't. You just have to learn to manage it. If you can define your risk, you will manage it. If you can manage it, then you take control of over the risk. So that's why I'm showing you this pattern. This is the best formula so far. You are not going to use, sometimes you use 0.5 pips. 0.5, you will see it. I will show it to you. 0.5 pips, and you are getting nothing less than 570 pips and above. In gold, gold is highly volatile. It's highly volatile. So it can, gold alone can spin you more than 200, times reward. And using very, very low pips, because we are going to be using the chart that will give you that very low at the risk advantage. You understand? So what is AMD? AMD is a study, is an in-depth research that was taken by our market legends, Richard Wyckoff, Jesse Livermore, Paul Tudor Jones, those hedge fund managers. They have been there for a very long time. So most of them happens to be the one that set up the pattern. The followers, continue to propagate the system after their deaths. Most of them are still living. Most of them have died ago, like Jesse Livermore, and the system still works up to date. It still works. Now I'm going to show you something that coming. So just Livermore. I'm coming. There's a particular quote I want to get across to you, so that you see that whatever we are doing is established by the market legends. It's not like people whatever system you are seeing in the market is evolution. It's evolution from whatever has been right from the one of technical analysis. Everybody is just trying to research and make something out of what already has been in existence. What already has been in existence. Please, if you are not seeing my chart, just let me know. So the accumulation phase, manipulation phase, and distribution phase. Those are the three phases that operate in the market. If you follow these three phases, you are in money. In and out, you are in money. If you learn what happens in each phases is a very simple concept. If you learn what happens in each phases, you are in money. You understand? And this is how the market makers continue to move the price up and down, day in, day out. They come in, as they come in, they create a kind of campaign. They don't use stop loss. Because they have the huge volume to control the market, to move the market in their own way. They control the price. They control the price with their cash in hand. They control it more than you and me. Yeah. So what they do is that they move the price to trigger off the lows and the highs, the liquidity that is existing in the upper and the lower range of the market. As they trigger off the price, what happens? They move it the other way around, I mean, in the opposite direction. So what is accumulation? Accumulation happens below the low of the open of the price, of the price. Market opens, like for example, if the market is going to be the bullish day, that means it will first of all open and go down to trail off the stop losses of retail traders. Those that put their stop losses here, market will trade down. It will open, trade down. Then at the end of the day, they start distributing profit. It will close above the open. So we have the bullish day. It will trick opened, went down. That is manipulation. I mean, it will accumulate a lot of assets from retail traders that are trying to sell off. You know, because they are coming to buy, they must buy at a lower price. So as they finish accumulating that asset, what happens? They move campaign. They induce campaign for people to come into the market. And when people see volume in the market, they rush in the crowd way. And when they rush in, they are going to sell at the top of the crowd. So that's why you see this, the market will move up, and at last it will close above the open. This is what happens. I will show you in the chart. This is what happens every now and then. So you must know how the market makers move the price. You must understand how they move the price, at what level, what volume. You must understand those candlesticks that induces, those candlesticks, this thing that induces a mass fear and greed into the market. You must understand them. Now, if the market is going to be bullish and bearish for the whole day, that means market will open here and trade up. It will trade up all the liquidity, cash, or the stop losses that is existing at the highest peak of the market. They will trail it off and they will make money out of you, and they sell off in opposite way. You understand? So this whole process is repeated every day, every week, and every month in trending market. I took my historical performance of gold from present December till the 1st of January. Till the 1st of January is 95% consistent. This formula is 95% consistent. Let's go over to gold. Let's go and watch what happened in gold. I will show you, so that Akoboya, I'm trying to mimic. Is what, if it doesn't work, I will not come up with this plan. If it does not work, I won't come up with it. This is gold. This is gold. Okay, let me use okay, no worry. This is gold. You see it? You see gold? This is on Sunday. This double line represents Sunday, where market opens. This is Friday. This is a Monday. You understand? This represents where market opens on Sunday. This is today. Sorry, on Thursday, which is the 24th of December. This is where market opens. Closes. It opens here. Can you see it? It take out after this money accumulation. This accumulation, market was strange here. We call it accumulation. It trailed off the previous high. Those orders, those liquidity, that are existing here, it trade them off. And what happens? What happens after? Market goes in the opposite way. Up to this place, we have almost about how many pips from this high? And you can see how many pips it market move just in a day. 517 pips just in one day. Just in one day, 517 pips. That is what throughout till we come back, we come to the end of Wednesday. Yes, Monday, Tuesday, Wednesday, Thursday. Market was still selling down. Now, the previous week, this is the previous week. This is Monday. This double line Sunday. The opening of market on Sunday. See it? You see what happens? Market came down. It will accumulate. As it opened on Sunday, it trailed down the stop losses. So that means that is why at the end of the day, you see that the market remain bullish. Like I told you, if the market is going to remain bullish for the period that day, if it's going to remain up, that means it must come down first, take off all the stops, grab all the liquidity pool at the previous low, previous day or previous session low. You can see this is the previous session low, and market grabs all the cash that are available here. All the cash that are available in the previous day low, it will grab them, and what happens? See, this is my stop losses. This is where I enter. I will show you. This is my you see this small cycle. This is where I enter because oh God, I'm going to let me use my Fibonacci. You see it? This is 1 hour chart. You are going to go to 1 minute chart. 1 minute chart. As long as what you'll be looking at. Let me go down small. I'm coming. Let me not rush. I know you guys are waiting for this. You guys are waiting for this this thing. Let's not rush. We'll get there. You get there. My brother, this small, can you see this small circle? This small red rectangular line. That's your risk. You can imagine from this upper, because you are going to enter when the candlestick come inside the box. As the candlestick, you are going to set up your buy limit. You are going to set up your buy limit. As long as the market comes to that box, it will trigger off your buy, and it will put up. You see the stop loss you are using. See the stop loss. See the stop loss. The stop loss in 1 hour here is just what? About 9 pips. But if it's scaled down to 1 minute, you're not going to use more than 4 pips. If it's scaled down to 1, you see what I'm showing you in 1 hour. This is 10 pips or about 9 pips, because your stop loss will be at below this for a risk appetite traders, for aggressive trader, that you don't want to lose more than 5 pips. But if for the best safer trader, all those conservative traders, you still want to maintain your normal DC, you put it at 100. That or the previous the lowest DC that take off the liquidity pool. You put it at 100. That's almost about 35 pips. Still, it's something we still deliver more than SX. See it? It make almost about 737 points up the high of this place, and it still go up like that, more than that. Can you see it? So you can see that what the report I put in the chart, there's no lie there. It's just the way you trade. It's just the way you trade. That's 843 pips. 843 pips. From your 10 pips risk you took. 843 pips. Divide 843 by 10 pips. Let's do the calculation. 843 divided by 10 pips. Even if that's if you use 1 hour, you still get your, that means you get your 84 this thing, right? If you use your 1 minute, which I'm going to show to you, you not use more than let's say 4 pips. So that's where you come to this 210 or thereabout. So that's your reward, which is huge. The same thing happened here. So that's, I'm going to show you the 1 minute chart. Please, my VIPs, please, if you are in the house, please, I've taken your permission here. I've told you I have to be very fair to them. It's not easy. I have to be very fair to them because they attach value to this information I'm giving. I'm giving you free of charge. So let me share this with you. You are going to see my 1 minute stuff. Yeah, this is it. This 15 minutes, this 15-minute chart, 3 pips in 15-minute charts. So if you go down to 1 minute, all of them just show the same at the same point. At the same point. At the same point. Okay, that's for volatility. That's volatility index. All of them show this at the same point. If you watch carefully here, see it here. The market starts opening on Sunday. Market's opening, it came down, trade off. That's manipulation. That's manipulation, right? You are going to, oh God. You are going to, when you get this thing in 1 minute, in 1 hour, you get your bias. When the market took off the low in 1 hour chart, we are going to scale down to 1 minute or 5 minutes. For me, I fall in love to use 1 minute because of what? I want to beat down my brokers. I want to beat them down to use 1 pip, 2 pips. I want to beat the game. You get a point. So that's why you arrive at this 3 pips. You are going to wait at it. There must be a pullback. There is always a pullback after this liquidity grab. Market must go up. Can you see it? This is 5 minutes. Sorry, 15 minutes. Markets must go up and push back to it. Let's go back to the chart. Let me go and show you. Let me go and show you how we got that. This is 1 hour. Let me take off this first. This is 1 hour. So this is the lowest candle that makes the liquidity grab. That's the lowest candle. That's the lowest candle that makes the liquidity grab. Now you switch over to what? You switch over to 15 minutes first. Let's see 15. What happened in 15 minutes? You see the grab. You see the rally. The market must pull back. It will go up and push back to test, because there are still many orders that are still left behind this lane. In this place, that is why this market bounces up here after it touches the low. That means the market maker still left behind many orders there. So they are still coming back to trade out so many stop losses there. They are still coming back to grab many orders there. So market must must wait for a pullback. You must wait for a pullback. My dear, please, I'm sorry. I didn't promise I will review this thing like this. I'm sorry. I'm just being excited. I want you all to make this money. If you make your money, upgrade your level, upgrade your knowledge. Upgrade your knowledge. If you make this thing, upgrade your knowledge, please. Let's make 2021 a flourishing year for us as a trader, right? So the point must pull back to it. It pulls back. It really pulls back. See it? You see the pullback? You see the pullback? You see the pullback? You see the pullback? At what level? It's 9. What did I call this? I posted this in on the chat, on a forum. What did I call this place? Team, are you there, team? Every other guys, maybe one of the VIPs is around there, I don't know. So I call this place a name. There's a name here. It's a pattern. It's a pattern. It is regular. If you don't see it, you see another pattern. You see another pattern, you go for it. It doesn't matter that it must be there 100%. There are other patterns we use. We use QML. This is QML. You see QML here. This QML, it pulls back to it. After the QML, what happens? You move. It bounces. This is the QML leg. Let's go to 1 minute. You see what happens in 1 minute. You see what happens in 1 minute. Guys, make the money. Come to VIP class. 1 minute, 1 minute, 1 minute. Oh, sorry, I'm not to. Yeah, you see, this is 1 minute. Can you see that? This is 1 minute. This is 1 minute. So we use what we call an induced price action in 1 minute to achieve this lowest this thing. Can you see that? Market comes down here after this grab, liquidity grab here. Market rally comes down. If you enter here for the first buy, market still in subsequently, market still come back to test the same level. The same level. What will you do here? Let's take our DC. Let's take our. You take your DC. The candlestick that make the. You can. This is another method you can use too. If you don't want to use a Fibonacci, you can use this. This candle. That long candle. That long. We call it a trapped candle. You circle it out. That long candle. You circle it out. Take the half of that candle. Take the half of that candle. Here is it. So that's where you are going to put up your what? You are going to put up your DC. So we call this place induced price action. So market touches it, it bounces out, it still come back inside the box. Can you see it? So that is one point. You can still use your demand and supply. You can still use your running out of time. Okay. You can still use your normal demand and supply. This thing. You can still use your whatever your this liquid doji sandwich liquidity pool. You can still use it. So at the end of the day, we don't take more than 4 pips. At the end of the day, let's see this. See it here. See this inside this box. Inside this box, this 10 pips. Then come. Yeah. So this is only for a risk appetite traders. Once the market comes there and it comes to this place, you are going to put your stop loss below here. You can see it. Put your stop loss below here. You put your stop loss below here. What is this? This Quasimodo. This one engulfs this place. You understand? After it engulfs this place, and the market comes down to touch your 72.5. It does not touch 78. So you are going to put your this thing at. So you have to be very, very smart, guys. You have to be very, very smart. So if you are going to maintain that lowest pip, you are going to be very, very smart to put your this thing at the bottom of that box. That's our demand. This is what I call a flag limit demand zone. You are going to put your this thing at the lower this thing here. You don't lose more. You don't take more than that's 4 pips. So if you still want to do 89, if you put it at 89, that's 16 pips. It's still okay. But I like to see beat down my broker. You understand? So you can see come here. If you miss any of the markets, still continue to pull back in 1 minute. If you use 1 hour, you won't see these pullbacks. In 1 minute, market still continue to pull back into that place. It not continue to pull back to it. It touches 78. It bounces. Guys, see here. You see, you are still maintaining that 3 pips. Come see it here. It touch here. If you put your this here at 89, that's almost about 4 pips. 4 pips in 1 minute. So your first grab of profit After the market bounces, your first grab of profit is almost about to the high of this place. You have gotten 158. So that has compensated for whatever risk. 158 pips, and you are taking 3 pips as a risk. So you are going to enter multiple this thing. So that one will trigger off your this thing. You use that one to hedge your risk. You exit out. So that when the market will still come back to that place, see the place, it still come back to it. Can you see it? Market will never go to hit your stop loss. Market is still coming back to test the same zone. Liquidity is still in that place here. Because of this candle here that coming down here, market is still coming back to test this place. This candle is what we call an induced price action. They call it an induced price action, or what they call a imbalance, or whatever other people call it. You understand? But me, I name it as my own name, induced this thing. So if you take the Fibonacci higher, you see the level at what level there. Market, as long as the market does not go beyond 89, just put your buy limit. You can set up 10 orders at each zone of Fibonacci. Set buy limit. Put your stop loss at 89. I've shown you so many. See it, market does not come back. It bounces off. Can you see it? Please don't write on my this thing. Don't mind write on my oh God. Who's writing? You somebody, Market Sinner, please. This is what I hate. It's causing the disruption. You have disrupted the chart. Market Sinner, please. Please, I'm begging you. Thank you. So that is it, my brother. That is one point. Now, for sale that happens at the top of it, you can see that up to that place, your this thing does not come back to hit your stop loss. It will never hit it as long as you enter rightly. You can see I did not use single indicator here. I didn't use any single indicator here. This is what I call equal low here. When you have equal low after the liquidity grab, when you have an equal low, it's fantastic. This is QML. In 15 minutes, you see the QML, very obvious. You see the QML. I love QML. So QML is going to be your guys, I'm revealing something to you here. QML is going to be your entry pattern. One of the entry pattern. You must get HQML. If you don't get it in 15 minutes, scale down to 5 minutes. If you don't have it in 5 minutes, scale down to 1 minute. You must get QML. That's Quasimodo. You must get it. After the liquidity grab here, you must get it. So you now know how to now manage your risk at that level. Don't take more than 5 pips. At most, it's too much in 5 pips. For me, I don't want to. I want to play smart, so that if you have even $20 in your account, you can still trade this thing. You see, the business of probability is this. The business of probability is that if you have 10 trades at the end of the time, and you lose 5 pips, that means you take a risk of 5 pips, and you lose out of that 10 pips, even 10 trades, even if you lose 7 trades, 7 times 5, that's 35. What about, you can see when we take that trade, we almost about the first high gave us almost about 158 pips. You can imagine the reward if you put your distance at 20 as in your reward at 20 times the other 3 that is left, that is 150. You minus 50 from 150 from your distance 35. Is that not worthwhile? So that means even if you have a loss of 7 trades and you have just only 3 wins, at the first take profit, you are circling out, and the trade went up to give you almost about 845 or 843 pips. Are you seeing can you understand what the business of the probability I'm working at? So we traders, we trade on probabilities. As long as you maintain your trading plan, it will work out for you. Because if it does not trigger your this in the first plan, wait for another trade, it will trigger. What you need is just 3 or 5 out of 10 trade. As long as you have almost about 60% winning rate, even if you 50% winning rate, it will work for you. At the circle out of the month, my brother, my sisters, is a big feast. You see, so markets come up to make. You see, this is Monday. This is Monday. This is Monday. On Sunday, market opens on Sunday, it pulls up. Can you see what happened? He grabbed all this place, all this money that is in this place, he grabbed all of them. Is this not head and shoulder pattern? Even if you don't know how to use this thing, even if you don't know how to use your Quasimodo, you can still use chart patterns. Just be smart. You can use chart pattern. And another pattern I love most is what I call a flag. Flag is regular. The market this thing is regular. It's most regular. So you have so many patterns to use. So you won't complain that you don't have kinikon, you don't know what to do. There must be pattern that will set you in. Because I tell you that after the pulls, after the liquidity grab, there must be a pullback. See here, there's a pullback here. This is a fact. If you go down to your 1 minute, my brother, you will see this pullback in a very, very obvious way. From that place, that pullback to this place, it has given you almost about 479 pips. Just that day. Now, somebody's chatting. What is it? Reserve your questions till the end of the class, please. Reserve your question because of time. I need to sleep. I need to rest. So please, so that the class will not be too this. Reserve your question till the end of this. Note down your questions, your suggestions.